So we are now in conversation with Rohan Verma, CEO and Executive Director at MapmyIndia. Rohan, good morning, or rather good afternoon. Thank you so much for joining in. Let's address, your earnings at hand. I also have with me my colleague Rucha, who has also looked at the company very closely. So both Rucha and I will, of course, be talking to you about the quarter gone by. But, right at the top, Rohan, your assessment of the quarter, it looks very strong to me in terms of your operations. What's the way forward? What can we expect in the new financial year?
Sure. Thanks a lot for having me. It was a great quarter, I think, and very good year. We grew, 35% revenue, and also our EBITDA margins were 41% and PAT margins were 32%. What's also been heartening is the open order book that we've generated at the end of the year. From 918 crores at the beginning of last year and 700 crores the year before, we're now up to 1,372 crores as an open order book, which is a growth of about 50%. And so that sets us up very nicely for the years to come as well. Our goal is, as we've stated last year, to cross 1,000 crore rupee milestone by FY27, FY28, which is about a 35 to 40% CAGR. And if you look at the last 3 years track record, it is a 38% CAGR in terms of revenue. And again, like I said, the open order book. So we're fairly happy with how the quarter and year went by. And looking at the next few years, the medium term, quite confidently as well.
Sure, sir. Thank you so much for that, Rucha, this side. On the 1,000 crore revenue mark by FY27-28, I would like some more perspective on which segment do you expect this kind of run rate? Is it more towards the corporate or the government side, which you likely mentioned in the conference call? Just wanted to know your trajectory across the segments going ahead.
Sure. Both. We have segments which we call automotive and mobility tech, and consumer tech and enterprise digital transformation. Meaning we have automotive OEM clients where we go built into new vehicles, whether 4-wheeler, 2-wheeler, or even commercial vehicles like buses and trucks, or mobility fleets for logistics or people movement, or as you said, corporate and government clients across different industry segments. The growth that we have been seeing and that we foresee is quite broad-based. Each of those areas, are sunrise sectors for our types of technologies, which are maps, analytics, IoT, drone, navigation, connected services, geospatial technologies, etc. And so the growth that we foresee is also going to be broad-based, covering each of these sectors. And if I had to simplify it, map-led business and IoT-led business are the 2 pillars currently for the company, with drone-led business coming up as a 3rd pillar. IoT-led business has grown phenomenally in the last year, kind of 91%. And also the margins of the map-led business are pretty strong, EBITDA margins of 54%. And in IoT, as we said before, initially the margins are low. It's a device-led or hardware-led SaaS business, but then the SaaS income kicks in and the margins grow. So you saw the full year margins of the previous year from 1.7% to now 11.6% for the full year. And also 4 quarters ago, it was 4%. And last quarter, it was 17%. All of this for the IoT-led business. So in that front, it's going to be broad-based growth across segments.
In terms of the IoT growth, as you rightly mentioned, phenomenal growth, almost 90% growth in that. So just wanted to have some perspective. In this segment, is this more of selling hardware, the margin from the hardware rentals, or is it more towards providing the software as a service to the clients?
Sure. It starts with selling the hardware, but then the SaaS income kicks in, because it's the software that people are using to, let's say, monitor the movement of vehicles or get video analytics as to the safety of the vehicle movement, or optimization of logistics, or fleet management. So it is primarily actually a software solution sell. It just so happens that we have to install and provide a device in the vehicle, be it a truck or a taxi or a bus or a car or a two-wheeler fleet. So it's SaaS income essentially, but upfront we get kind of a device income as well.
Sure, sir. Let me move on to the margins front. Just breaking down the major expenses. I see the technical outsourcing services, that part of expenses is almost more than 200% up YOY, while the employee benefit expenses is just marginally like 15% over there. So are you not looking towards talented employees and more towards outsourcing, which might have a more impact or hit on the margins?
Actually, we are people-driven product and platform company, IP-driven, focus a lot on R&D. So in terms of people, actually, that's the core of our business. And that's what's driving the product and platform development, which you see MapmyIndia at the cutting edge of tech. The technical services outsourcing is to support certain revenue growth. So some types of projects require, or some types of solutions require feet on street, which is not so much linked to the product and platform development. It's linked to the, in some part, the revenue generation. But if you look at the business or margin structure overall, there's huge amount of operating leverage in our business because the people is a fixed cost who are building the products and platform. And in that, also, if you look at attrition, it's less than 10%, which is quite a strong kind of indicator. Growth in employees is about 10%. 30% of our 668 permanent employees are actually ESOP holders. And that's how we are kind of keeping people excited and motivated. And the core philosophy has always been to upskill, train the people from very early on so that we can do indigenous innovation at the cutting edge. I mean, we are led by technocrats, and the team itself is so dedicated and passionate that, by skilling them up, we can build innovation in India, which is world-class. So heavily focused on people, heavily focused on products and platforms, and technical services outsourcing like cost of material is a small percentage, and that kind of scales to support certain revenue growth.
As these trained employees come into, generate revenue for the company, do you expect this outsourcing expenses to come down?
There is always some amount of cost one has to incur when one is going through such kind of significant growth of 35%, as I said, or this last 3-year CAGR of 38%. So, and there's certain work that we do want to outsource. It is not core product and platform development, of course, but if there's some field activity, let's say, for example, a property tax assessment solution is given by us. There's certain activity that you have to do in the field for property taxation. That is to support the revenue, and so that kind of work definitely easily is a outsourceable one. Whereas the property tax software or the digital twins solution that we are building, those things of course are done in-house.
Got that, sir. I also wanted your perspective on the drone business. I read that you were trying to, have your footprints, and maybe that will be another pillar or another business segment for you. And, on the back of the recent acquisition that you've made. So what kind of TAM do you expect here, and what kind of percentage of revenue or margin or any color on that side from the drone business do you expect?
Sure. I mean, in drones, we are kind of offering full stack solutions to customers. The customers who want drones, we are providing drones to them. Customers who want drone-based solutions, we are providing that to them. And this cuts across multiple enterprise verticals, be it in the private sector or public sector. So all the way from digital twins of warehouses to digital twins of areas or cities where, use cases which are revenue generating for the government. Those are the things that we are focused on doing, which are use case driven for or application driven based on drones and digital twins. It's going well. It's something that we are building capabilities for. It is something that we're excited for the futures. The TAM around drones and drone-based solutions is quite large. I think we're one of the few, if not, actually we're the only company which brings together map, IoT, and drones. And all three are very, very complementary, because when you look at the use cases of drones, which are big, One is for mapping, the other is surveillance, which is IoT driven. Third is inspection, which is a combination of map and IoT. And then there could be delivery, which is again a map, navigation, and IoT kind of use case. So by having these three pillars, I think the solution we can offer to the clients is actually much more holistic than a piecemeal solution offered by somebody else in the drone value chain.
All right, Rohan, we leave it at that. Thank you so much for joining us and taking us through the quarter gone by, as well as what we can expect going forward. And along with that, also taking a moment to thank my colleague Rucha for leading this conversation with MapmyIndia. Thanks, Rucha.